My name's Maria Lawyers. We're here today with John Woods, who's Australian Ethical's Head of Asset Allocation. Welcome, John.
Morning, Maria.
Welcome.
Thank you.
I wondered if we could just kick off by perhaps explaining what that means. What do you do as a Head of Asset Allocation?
Yeah, sure. Look, I think I've got the best job. It's my role to blend the major asset classes, equity, bonds, alternatives together to help our funds meet their investment objectives over the long term for our members. And then once I've decided on those asset allocations, we get into the nitty-gritty and I actually put the funds together. So portfolio manager of the balanced fund, portfolio manager of the high growth fund, as well as our super options.
Tell us a little bit about the market then and the economic backdrop.
Yeah, look, 2022 has been a volatile market. I describe the world at the moment as fragile. Markets are beginning to be positioned more constructively after the shocks we experienced in the first half. If you look at the market's pricing of key indicators like inflation, it implies that it will become more under control, that central bank policy will be effective in bringing it down to within expected ranges. And that's echoed when we look more broadly as well in areas like agriculture prices and commodity prices. So if you take wheat futures or something like that, it will also show a downward sloping price for the future as well.
So inflation has been one of the biggest talking points of 2022. So do you want to talk about what your view is on that and what the implications are for investors?
Yeah, look, inflation should be a central theme in investment through time. It's the most important variable in retirees achieving the standard of living that they're anticipating. And 2022 has really seen the regime that we were in pre-pandemic change. That regime that we were in was catalysed by a period of QE, of disinflation coming from China. And the market was always worried that after a period of such unorthodox monetary policy that inflation could emerge. And as we saw the supply shock to energy prices and broader commodities at the start of the year inflation accelerated rapidly. And now we're in a period of high volatile inflation. But if we look at indicators from the market that try and look forward from today, such as the TIPS and agriculture prices, both are sloping downwards and suggest that the action that central banks have been taking over the last 6 months to raise rates rapidly, almost at an unprecedented level, are beginning to have an impact.
Potentially some good news for the future.
The market is positioned constructively for 2023. The environment is fragile. There are a number of risks to that. If we look back at history, the US Central Bank, the Fed, only one time in the last 11 have they been successful in engineering a soft landing. But Powell has all the lessons of his predecessors in the past to look back on. So he'll be cognizant of the mistakes they made, and we're in the best position as we have been in history to deal with what lies ahead.
So that sounds like good news generally. Is that changing your view, your long-term view of assets and how they might perform over time?
Yeah, it is. I mean, inflation is the single most important variable in understanding your retirement outcome. Our multi-asset funds are designed to exceed inflation. And the tools that we can use to deliver inflation plus returns in moderate inflation environments, like some of the defensive assets, bonds, infrastructure, they're becoming a more important part of our allocation from here.
So you talked about multi-asset funds. So along with asset allocation, you look after our multi-asset funds as well because they go hand in hand.
That's right.
So can you talk to us a bit about the performance of the multi-asset funds this year?
Yeah, so the managed funds we have on offer, the balanced fund, the high growth fund, the first half of the year, so up to June, was really impacted by the energy crisis, the panicked moments we had as parts of Europe and the rest of the world focused really on prioritising energy security over energy transition. And those, we saw oil up over $100, nearly $120 through that period. And, we don't invest in fossil fuel companies, so that was a significant headwind to our performance. In the second half of the year, so June onwards, we start to see longer term trends emerge. So there's still headwinds from rising rates, but that commodity shock has abated and our performance has started to catch up a little bit and start to exceed benchmarks again through the second half of the year. So we have a very long-term focus, not going to respond to 6 months of an energy shock. But it's pleasing to see that some of the trends we were invested in prior are coming back to the fore through the later part of the year.
Well, that sounds promising. Those funds also include unlisted assets.
Yep.
So they're probably some of the most interesting stories. And do you have any favourites that you're looking at the moment?
Yeah, unlisted assets have a really important role in multi-asset portfolios, particularly for an ethical investor. That's how we get a lot of our diversification, is focusing on assets that we can't obtain in public markets, because we can go deeper into the broader range of private assets. Favourites at the moment, look, we're invested in a fund that's affiliated with the CSIRO. Look, they've been doing some really good work with early stage capital, so venture capital. And I'm excited by a number of their projects. Ones that comes to mind at the moment is the work they've been doing and the investments they've been making in plastic recycling. So breaking plastics down back to their original polymers so we can recycle them as much as possible. And that's exciting for a number of reasons. One, the returns have been fantastic. And two, if you think about the impact that has, plastics are a hard to abate use of fossil fuels because to date, they haven't been infinitely recyclable. But this is changing that narrative, so I'm really excited for what that could bring.
Does that mean I'm no longer be stockpiling my soft plastics in the cupboard?
Hopefully.
Are there any other unlisted assets that you're interested in?
Yeah, look, this year we saw one of our first investments in a way to abate carbon through natural capital. I think that was an exciting milestone for us, and I think there's a significant future in those assets, particularly as we begin to discern through different types of ways to abate carbon.
So what I'm hearing from you is that in 2023 we should look at inflation perhaps coming under control. We're already seeing kind of some of the performance start to kick up from some of the other stocks that we're invested in outside of, obviously we're not invested in energy. Is there anything else that you can see looking forward to 2023?
As I said sort of earlier, it's important to keep in mind that 2023 is a fragile environment. The market's positioning at the moment is constructive, but there are a lot of risks. If you take what's happened with interest rates this year, one of the fastest increases on record, what central banks are trying to do is engineer a soft landing. I was looking at some statistics on that today for the US, and the odds aren't great. They've managed that 1 out of the last 11 times. But something that leaves me feeling comfortable is, well, all those central bankers are well versed in the mistakes of those predecessors. So potentially the odds are greater this time. And in markets like Australia, our track record of achieving a soft landing is far more frequent. Australia has been the lucky country, and there's no reason to expect that can't continue right at this juncture.
Just thinking back, John Woods, your personal portfolio, how are you thinking about that at the moment with the knowledge that you've got of the markets?
Yeah, look, I think with a personal portfolio, it's important to identify a core strategy and stay committed to that, particularly for the bulk of your retirement savings. I have a long-term investment horizon. 1 year doesn't change my view. I've identified my risk appetite through the volatility we've had over the last 10, 15 years, and I'm confident that the asset allocation I have in place will serve me well into the future. So you've really, in an environment like this, it's tempting to respond to the news, but it's important to stay committed to your long-term strategy. And
what are you most optimistic about for 2023 and beyond?
Beyond 2023, I am very optimistic about this energy transition. So if I look back at some of the long-term metrics, looking at something like barrel of oil per GDP, it's been on a continual decline. The cost of energy for the world's population has been on a continual decline. And if I look at some of the trends in renewable energies in particular, it's possible that we could actually see an acceleration in that decline of energy costs. And what we can do with that is really exciting.
Well, thank you so much, John. That was really interesting. And looking forward to 2023 that's just a little less volatile, right?
Thanks, Marie. That's what I'm looking forward to as well in 2023, some more BAU.